Hey, my Web3 fellow citizens, welcome back to the Novella podcast, where we dive into the state of the art of practices and methods that define how Web3 projects are built, grown, and led. And in the current stage of the evolution of a decentralized internet, I'm your host, Eugene Crypto MC, and today I am sitting with Aslan. He is the founder of Wildcat Alliance NFTs. Probably know that project. He's blockchain expert. He started very early, probably he knows Satoshi Nakamoto, but let's know in our conversation. He is proof-of-work visionary. He's also wellness biohacker. He has built on most chains: Ethereum, BNB, Solana, Bitcoin, Litecoin, Doge, and even Vertcoin. So he is extremely experienced speaker. So Aslan, I'm very proud to have you on our podcast. Thanks for joining me today.
Thank you. Thank you so much for having me, and thanks for that introduction. Yeah, definitely well versed in the space. We've gone through a space chain journey, right? So the Wildcat Alliance, yeah, we've been on a lot of different chains, and I've personally have been beat up in the space and basically every aspect, right? So the advantages are if you get beat up enough and you look around, you start to see things that no one else sees. So always just brings me back to the basics, and I have a feeling that you're a big fan of the basics too. So yeah, I'm excited to talk on it. Yeah.
We're gonna discuss mostly the old stuff today. So if you are a true Web3 fan, starting with 2009, 2010, with the first mining, Bitcoin, and when every coin had its own blockchain, there was such a time. I do remember this very well. So Aslan, my first question is, beyond proof of work and proof of stake, many alternative consensus mechanisms have been proposed, but most have not survived. Why do you think that is?
Well, so utility is usually funded. Okay. So what was beautiful was how Bitcoin was grassroots, and it was started with this giant network, and it created this decentralized network. And, it was a consensus mechanism sandbox of success, right? So we saw everyone come together, but Bitcoin was the first, and those people were reinforced, and then it grew to be something different with the ASIC miners. But it was a grassroots movement that was organic, that was decentralized, and it wasn't funded by VCs. So, thinking about taking on new consensus mechanisms with centralized ideas, it's hard to keep that decentralized and pure, fair proof of work, right? But issues with Bitcoin, like for instance, the pools have the voting, right? Which means the pools hold all of the ASIC miners. And why would those pools ever want to change their algorithm when they have billions and billions and billions of dollars of ASIC miners? So, seeing Bitcoin change an algorithm and us adopting a decentralized database for a new consensus mechanism is probably something that we'll never see. But maybe in a chain that was ran 100% decentralized, and one individual miner who has a gaming PC is part of that voting network, and maybe we can see chains, this is just a crazy vision, but chains agreeing to consensus mechanisms to hash algorithms that actually make a difference, right? Like maybe Internet of Things or something. So I don't know if that was the question, but it's just hard because utility is usually centralized, right? I wrote an article, utilities don't matter in crypto, right? And I'm only saying that is because crypto is supposed to be decentralized. And once you start putting in these utilities like helium, you got unfair distribution and VCs that need to be paid. So yeah, it's kind of a hard space when you use the word decentralized to be true in it and to actually bring innovation that's utility.
Bitcoin mining is often criticized as useless. I mean, personally, I'm an economist of the Austrian school. I don't think so, because if something voluntarily is being consumed, that it cannot be used by default by theory, but propaganda does not think so. So over the years, there have been attempts to pair mining with useful computation in different scientific resources, I would say. So yet none have gained traction. Why has this approach struggled, and do you see renewed prospects for it's in today's environment.
It would be a shame if all of the hash power was coming from GPUs, right? Because that would just be a shame if we were just using GPUs for hash power and it wasn't contributing to anything, which it happens on some chains, but the thing is these are ASIC miners. So the Bitcoin ASIC miners, those things are just there for those particular hashes and that type of algorithm. It's going to be hard for Bitcoin to ever change its algorithm because those are the ones that are involved. Yeah, I don't think that we're going to be able to see Bitcoin change its algorithm, but like I said, it would be great if the computers that were being used, like the GPUs, were actually, let's just say, you were using that hash rate in order to help with a decentralized AI learning model or something, right? So like a proof of space type of thing. So like in a perfect world, it'd be great if a individual, right? Because we want a I am a decentralized maxi. So if an individual donated his computer, his hash power, his memory, all to one storage database that is all being collected by individuals, right? So it's all decentralized storage, decentralized processing, decentralized GPU, hash power, like AI machine learning. And then, maybe someday, because of everything that we're talking about right now, we could actually have a decentralized AI where we're not regulated. So, a blockchain's and decentralization and the technology, that's really where it comes from because it's just a storage database that we want to decentralize and we want the data to be fair, right? And open to everybody to see. Instead of explaining, maybe it was better that everyone was able to kind of connect on how everything works. But yeah, it's a hard question because there's so much centralization in this decentralized environment. But let's just say Ravencoin, Vertcoin, Monero, but not an open ledger, so it's going to be tough. But that's the type of system that is the future. And if we can figure out how to use that, or maybe even find a chain that's willing to work with the voting to be able to switch algorithms on things like this, now we're talking. Like now we actually are using this cryptocurrency right way. So, having these centralized utilities with the cryptocurrency is cool, but having the decentralized utility, like being able to contribute, your own processing in the future of tech, that's really a cool vision.
For years and years, Bitcoin stayed as a first very conservative, practically immutable cryptocurrency, and that's why we valued it. But now Bitcoin Ordinals, NFTs, appeared and other emerging Bitcoin protocols and experiments. So do you believe Bitcoin should continue to evolve in an experimental way, and if so, how? And if not, its greatest value to remaining immutable, intangible.
With the ordinals, there's controversy in that. And with Bitcoin, it kind of makes sense, right? But it's also bringing tons of value to the ecosystem. But unfortunately, the value that it's bringing to the ecosystem is the part of the ecosystem that has been institutionally controlled. So we minted a project on Bitcoin and it was a collection under 1,000. It cost us over $10,000 and the art was absolute garbage, right? Like you could barely even tell what it was, but we put a little tiny speck on Bitcoin. It cost 10 grand. Now, where's that 10 grand going, right? The 10 grand is going to congestion, right? So centralized environments can actually put a bunch of orders in at low fees and they could raise congestion, right? And then when the congestion raises, now your prices to inscribe are a lot higher. But, at the end of the day, that's Mara, Riot, all these Fortune 500 companies benefiting from it. Overall, yes, it's really awesome for the ecosystem. It starts to bring utility. And then, okay, what is it doing for Bitcoin? It's squeezing people out of Bitcoin. And it's good, right? Because gold, does have this tax, right? So it's really expensive to go to a pawn shop and trade in and out of gold. And Bitcoin's the same exact way. And these transaction fees give it more value, more energy, more intrinsic value. And especially when you mint these, I think it's kind of a special piece of history and how expensive it was to do. That's kind of cool. But Yeah, if this was a GPU ran network, right? Like Bitcoin originally started, which I hope that I could trace out how Vertcoin became to be Satoshi's vision. But, that individual miner that was, contributing to Bitcoin, he would have earned huge rewards for that. The goal would like I just did the math on Vertcoin, there's like 40,000 miners on it. That's 40,000 GPUs, 40,000 computers. Like those individuals would have benefited from the ordinals. Now, what did the ordinals do? It squeezed that ordinal infrastructure on the different chains because it was expensive. And that was something that we saw right away. And as soon as we saw that, we went over to Litecoin. And in order to make a Litecoin ordinal connect collection, instead of 10,000, we're looking at maybe like 500, 300. And now we're able to use the database, right? That's the whole point of ordinals. I know we're talking about NFTs and Web3 and degens. So, I own a biotech company and I'm in gene therapy, and things like, protocols and sequences that could, in the day would say would get you killed, right? Which, whatever. We can put those protocols or peptide sequences, amino acid sequences, nucleotide sequences, the get hub of the whole entire human genome that everyone maybe have tried to hide, which, I don't think they're that smart. But now we have all of this data. Now we can index it just like we would in Ordinal. And now, whenever government shuts down a URL, we could re-index it all over again. And we have this data that's an artifact, right? So there's utility coming in out of it. Will they put that data on Bitcoin? Yeah, people might put some like cool protocols or deed to their mansion or boat or something, some sort of like timestamp data, which is also kind of like a copyright, a patent, and then you own the Satoshi. We see these other chains, and Litecoin is more sustainable for the ordinals. So that might be, we actually use Litecoin for the utility that it was designed for, the more transactions per second and the less tax on in and out, right? Like silver. So you could use that utility on Litecoin. But if also Dogecoin has it too. So there's ways we could use these blockchains as storage and database. And I mean, obviously, you're seeing us look at Vertcoin. It costs nothing to get involved in that ordinal ecosystem. Obviously, our company is going to be looking into posting protocols. We want to do open source protocols, right? Like I actually met with the Nigerian president last weekend, and talked to him about, integrating a biotech capital of the world. And he was talking about data, and I'm like, data is the most important. There's real level utility that can be used. And if the whole thing was decentralized, there's real voting that can make change. So yeah.
By the way, you have mentioned your biohacking turn. Tell us your story. Why did you turn in that way? And what are your personal biohacking recepts? Food addictive, maybe use if whatever you may say about this going beyond our agenda that this kid is talking about Web3. It's absolutely interesting for us to.
I'm a two-time national champion wrestler. So when I went to school, I went to school for 8 years and I changed my major constantly, and I picked the classes that I was going to get good grades in, right? That was going to help me. So outside of that, I was always passionate about the body. And then after wrestling, I got injured, and then that's when I got into mining. So I was a jock that got into mining, figured out computers. And then I went all into Web3, and it got really dark, right? It's a really dark place, narratives everywhere. So then I got out. I took a year. We were still building ordinal infrastructure, and I got back into biotech. And I then, realized that I was spending a lot of my time in Web3 and the narrative was toxic. So I went back and I focused on myself, the cell, right? And I started really, really studying the cell, but I started studying it with a technical mindset now. So it was way different after coming out of Web3. And now I'm understanding everything is machinery. As you see, you hear me talking about GitHubs and things like that, right? I started taking peptides and I took them for a while, and I started a peptide company. And just I think being able to be versed in technology and then being versed in biology, it turns into biotech, and it's kind of easy when you understand how code works and DNA, DNA, RNA, code, ribosome, amino acid sequences. Like there's a lot that can happen. And now when you bridge these two, and if let's say the answer to health sovereignty and financial sovereignty is in the same place, or if the puzzle piece is in the right place, it fits all around, right? So I think I'm just here for the people and I'm really driven by the tech. I love that I don't believe or trust anything anymore. And now I'm going into it, digging, knowing, and I'm using the tools that I've learned from my failures. I love where I'm at. I really do.
It sounds absolutely fascinating. I'm proud of having you on our podcast. But let's go back to the core topic of our discussion, Web3. What are your thoughts on Lightning Network? So it's extremely important technology. We do remember the times when we were promised that you will be paying for coffee by Bitcoin, and now it's quite obvious that Bitcoin has been a store of value asset. Nonetheless, Lightning Network and Andros Antonopoulos, one of the favorite Bitcoin evangelists, he wrote a book about Lightning, which was translated in dozens of languages. Your thoughts on Lightning Network, why it has not achieved yet a broad adoption?
Lightning Network. First of all, soon there's going to be a Fidelity network, and then there's going to be a Goldman Sachs network, right? So this is now what we saw was someone trying to do this in a decentralized way as much as possible. It's still centralized and it's working in the same way. And I think the terms in crypto and like bridges and wraps and all of these things make it really hard for people to understand. But it's kind of like XRP. They make the narrative sound just right and complicated enough for you not to really understand it. But really, it's kind of like putting your money in a bank and you're getting Lightning Network wallet, right? But really, it's just Lightning Network is the bank and you're adopting their login. And you see what's happening, you understand? That's why Bitcoin takes 10 minutes to do. Yeah, they may post it just like an exchange would when you do trades. It's not on chain, but then it's aggregated in, right? I think about it like that. It is built in a way where like if you took it to court, it has its own little decentralized things inside of it too, which they use the decentralized. I'm trying to think about how to say it, but if you like Uniswap did a good job with it, right? Like they're kind of centralized, but they were able to term everything decentralized. And when they went to court, they like beat them up. But same thing. At the end of the day, we're bringing in these coins and we're wrapping them into the stock market and we're putting them into trusts, and the banks are kind of owning them. So at the end of the day, I think we're going to see more of like that, the Fidelity type of network thing. And you're just going to go into your bank and you're going to send your Bitcoin from one bank to another bank. And Lightning Network's cool because it's kind of like saying, hey, I'm a decentralized person, kind of like Mimble, Wimble, MWeb, right? But at the end of the day, I don't think it's gonna reach that type of adoption. I think the boomers and the pre or post boomers, they're gonna use the systems they're used to. Cash App. Cash App has Lightning Network though. I use it all the time.
I don't know if you're familiar with the concept of Hashrate tokenization. My colleagues have been discussing this concept for months recently. If you do you see a market, the significance of this market potential for this? And if so, which models of tokenization of hash rate make the most sense? What can you say about that?
Okay, hash rate tokenization. So, for instance, I just make sure that I have the question correct. Let's say that someone was to contribute their Wi-Fi unit, right? And they would get paid for that Wi-Fi unit. Is that what you mean?
Yes.
All right, so here's the thing with that. It's hard. Like I said, I'm a very decentralized person, and if we want it to work in DeFi, it needs to be something that's built off of something that's already massively adopted, right? Otherwise, I don't think very much crypto stuff's going to work unless we could build on these others that abide by Bitcoin's laws, right? Hash rate tokenization and how could so I think it's hard to do. I think it's hard to do fairly, but like for instance, like for on Vertcoin and in these BRC20s, right? They are on chain and for instance, they want, the community wants a cell phone miner, okay? And the cell phone miner would be, let's just say, it wouldn't be on-chain hash rate, but they would be able to contribute. And by contributing fairly, they would be able to get given a token, right? or a BTC20, right? And they can do all of the social media stuff and it'd be like a proof of work. But it's hard to create a whole entire infrastructure unless, all right, this is how you do it. Digibyte, for instance, right? Digibyte has I'm sorry I went into that rant, but it took me a second. Digibyte has a multi-algorithm, and that multi-algorithm is, for instance, SHA-256, right? I think that's what it was, script, and then a GPU algorithm, and then I think it has two other ones that are like GPU, CPU, or something else, right? Now, let's say that Vertcoin, for instance, I don't know if it can, but let's just say was able to put another algorithm on, right? It started fair, it is fair, the algorithm's fair, right? And now you might be able to plug in another hash algorithm like Digibyte did, or maybe Digibyte could adopt like we're trying to merge with Digibyte, so their GPUs will, when they contribute to GPU, they'll get Vertcoin and Digibyte at the same time, which helps everybody, right? So let's say that you had another network where you're plugging in Wi-Fi devices, right? And they adopted that algorithm. If you could make that a useful algorithm and you could plug it into the decentralized consensus mechanism that's already built, then I could see something like that working. I don't know if you understand what I'm saying, but if you could somehow plug into a pre-existing decentralized chain and use the inflation of that chain to reward your system.
I'd love to ask you about one of the problems we personally face in DAO and Valve. This is a problem of decentralized building of a startup. A startup is the project which has its own management, of course. Nobody denies that. And startups typically require clear coordination. So CEO, CDOs, and so on and so forth. Enough in centralization and coming to Web3. Some founders think that startup can be run, or must be run in a decentralized way. In how concept of DAO appeared. Do you think a decentralized VC-style startup is realistic, or from the outset, or it sounds like an utopia? It cannot be run just because of the lack of centralization of management. And what pathways do you see to deal with this idea? We will build a project, then we'll switch the control to community, and community will be running this project in a decentralized way. Sounds a bit skeptic. What are your thoughts on that?
So I'm a person that looks into the future, like sometimes too far. But at the end of the day, these things are going to get regulated, right? So if you do want to do this and have a shot, right, you got to be prepared, completely prepared. So things like ICOs are going to be an issue, right? So if you are ICOing, you better be prepared that you may have to pay a violation someday, right? And if you don't, then you're not going to get recognized anywhere without KYCing, right? At the end of the day, KYC is going to happen if you want this to get adopted and put in the right regulatory framework where you're not going to get in trouble or be a liability to whatever country you represent, right? Because at the end of the day, we got to protect our money, whatever country we're in. Even if our country doesn't protect our money, we have to protect our money, right? And because that's our sovereignty outside of crypto. Thinking as if I'm the Fed, that private company that helps run the financial infrastructure, right? And they're now adopting Bitcoin. And now that they're adopting Bitcoin, they're going to be protecting Bitcoin's laws, right? And they're going to protect their money. And they're going to put as much liquidity into their money, which is going to be Bitcoin in the DeFi part of their how they balance their portfolio. And they're going to make sure that those laws are protected, right? And in order to do that, they're going to make it where it's very strict and very hard to become what that class really is, which is the commodity class, right? Of DeFi. So in order to do that, it's going to have to set tons of limitations on different things. Otherwise, people are going to be using, let's say, US dollars to buy a cryptocurrency from, let's say, it doesn't matter, China or Russia, right? And US is always whatever. But they could take all of our money. They could run social engineers. They could do TikTok. You think the government and the money people aren't watching this? And they could suck the liquidity out. So just be prepared that they're not going to allow money laundering forever, and they're going to start KYCing, and if they're real mean, they're going to charge security violations if you want to be on any of these major exchanges. And trust me, the world's going to work together on this. So that's what I see. So starting a new fund, a new startup in this space, I think that the trick is to get the regulatory advantage. Look at what's going on. You just be prepared for the worst. You could hope for the best. But yeah, we built in this space, and I would never do a ICO utility token thing right now in the space for sure, especially while we have uncertainty all over the place and we see certainty on one end, right? Uncertainty on this end, certainty on this end. I would, you're in the middle right now. I'd wait, to be honest.
What should we know about Proof of Work Foundation? What is its mission, current initiatives, long-term plans?
Proof of Work Foundation is under Proof of Work Strategy, kind of like Michael Saylor has MicroStrategy. We have Proof of Work Strategy, where over time we accumulate a lot of these undervalued proof of work coins. We're trying to revalue them, right? The ultimate goal is to wrap as much of it as possible into the stock market. You put it in a bank, goes into a trust. They wrap it. You could turn it into stock shares, and you got the closest thing to an ETF, right? But the cool thing is since these are commodities, Bitcoin commodity, Litecoin commodity, Dogecoin, if it's like in the second phase of being called a commodity. It is, if it hasn't been called commodities in certain legal framework, right? This is something that the SEC does not regulate, right? Because it goes in the commodity class. So it's a little different. It makes things a little bit easier. Since, we have this experience and we are able to pinpoint, let's just say the pathways of the laws of the future. Proof of work strategy is focusing on getting true decentralized education out, right? So educating the people about Bitcoin, Litecoin, Dogecoin, Vertcoin, and Ravencoin. And, our biotech company is also works with it. So a lot of our profits go into a organized distribution of different cryptocurrencies. But right now, mainly we're focused on Vertcoin. It is the most undervalued asset in that class. We also, in order to make these proof of work coins have a fair chance, we built Proof of Work Foundation so that we could give not a treasury, because it can't be a centralized treasury. That's what makes these chains special. But we could give these chains an opportunity because Vertcoin's so undervalued. And let's just say we set aside 100,000 Vertcoin for marketing and exchange listings and whatever else. And then we set 100,000 Vertcoin for, developing, right? Right now, that's not a lot, right? But when these proof of works get revalued, right? Because I see something that not everyone else sees. Now they actually have a treasury, and it's done, kind of like how Michael Saylor does it. And I'm a decentralized VC, if anything, right? I'm not even a VC. Like, yeah, that's what that is. It's there to give, an opportunity to these chains, pay devs for upgrades. The merge mining proposal, let's say we get, Vertcoin gets to $10. We could go to Digibyte and say, hey, we'll chip in. It's set up to give proof of work a fighting chance, and proof of work strategy is set up to bring Vertcoin onto the financial market and to take circulation. That's how it works. That's why Bitcoin's where it's at, pulling that circulation off. And now they're just relying on DeFi. And meanwhile, Mara Riot is giving all the circulation to, independent companies. So there's no inflation coming in on the DeFi world because the financial institution is now adopting the whole entire thing and trying to corner it. So that's why, these coins over here, if everything is happening in according to a formula, the people have a chance to get in first. And that's kind of what proof of work strategy is about, and proof of work foundation. We do Zealy Quest, so people in Nigeria have an opportunity to that's what we're doing. So people in Nigeria have an opportunity to put in work, right? Sharing posts, going on CoinMarketCap, educating, doing Twitter spaces and educating the world on, proof of work. They get rewarded from proof of work strategy. So, it's like a grassroots movement we donate.
Well, your message have been heard. So if you're in the proof of work fan or geek, just pay attention on that. A question about Wildcat Alliance. What sets this collection apart from other NFT collections? And what are its differences, economic features? So what we may know about this.
It was so I had no clue Wildcat Alliance would turn into what it is because it's not like a project, it's more of like a movement, right?
Mhm.
Literally. So, we started on Solana after first of all, we started an ERC20 project, and this is why we know that centralized issuers is not a good thing. And we didn't know what we were doing. It was right when I got out, and we started a coin and it got hacked, and it was a $26 million market cap, and our dev completely took over the contract, locked down liquidity pools, and like, holy shit, this is why no one should be investing in a token. But sorry, but so then we started a security DAO, educating the world on, what can happen and this and that. And after that, we did a project on Solana. It was a free mint, 3,000 collection. It minted out in like just a few hours. And it was all like Nigerian. So it was awesome. I was able to see these people trying to get a fair chance. It was a free mint and they got it first, but we marketed so well that the other people bought on top of them. We were able to see markets get made. But with that, we built this huge community, and it was a community of people trying to win in crypto, which was cool. And then, we saw the Bitcoin Ordinals happen, and we're like, all right, we got to do this. So, we were one of the first collections, the mint on it. And then with that, we saw this is the cool part. We saw the rarities in Bitcoin. So, like, one Bitcoin has 100 million satoshis in it. It's like a penny, but the first penny is considered an alpha because it has a bunch of zeros. And then the first penny of a block, like the first Bitcoin block had 50 Bitcoin, that has more zeros. It's 1 out of 5 billion, right? And then after difficulty adjustment, the first Satoshi would be a rare, and there's a whole bunch of zeros there too. And then the epic has zeros. So, we saw that. I'm like, wow, that's really cool. There's intrinsic, like in code, maybe value. And we saw that whole entire hash rate thing happen, or inscription fees were really expensive. So we went over to Litecoin. We minted a project on Litecoin and with the Ordinal infrastructure. And then I saw the innovation, and we built out the first Litecoin sifter. So we were able to sift the rare Litecoin or the rare Litoshis out of the Litecoin. Then, I was a Litecoin maxi at that point. My company was completely backed by Litecoin. I saw a huge opportunity. Vertcoin kept popping up my radar, one of the first coins that I mined. It's a Litecoin clone. We have to rebuild out our wallet because no infrastructure is supporting the ordinals. We already did a Doge collection, so we're like, what? Let's just put ordinals on Vertcoin. And I at the same time I bought into Vertcoin, so a lot of our treasury of Litecoin, started to go into Vertcoin, and we're like, all right, let's build this out. I think that our knowledge and experience can actually revive this chain. And the more that I looked into it, I didn't know that it followed laws of just five, right? So the more that I looked into it, the more I realized that I'm really in a special spot. So, now, the community has this fun utility where, we're going to be able to get thousands, hundreds, maybe 100,000 rares, right? More or alphas, and be able to offer other communities that have projects, something with intrinsic value to bring them on the Vertcoin and to start educating them. So, the narratives that were brought with Ethereum ICO, now we can bring to Vertcoin with ordinals, right? So we were able to use that marketing tool, we are able to use that utility, but our wallet, anytime you drop a proof of work coin in it, like let's say Bitcoin, it'll notify you if you have a rare, which is the easiest way to do that. Litecoin, same thing. Vertcoin, Dogecoin will have its own rarities. But it makes it really easy. And that's where I think that the ultimate win's going to be, is especially for the Wildcat Alliance, right? Because we experienced everything, and now we get to bring such a cool utility with intrinsic value over to Vertcoin. Meanwhile, on the financial aspect, I know we're just sitting here, even if it's not the winning chain, which, I think it is, I'm sitting here with the people who really, really know proof of work, right? Because anyone who's in Vertcoin, They're there because they understand Satoshi's vision, right? Because I did want to trace this out and then, stop the rant. But Bitcoin was created in order to set the foundation. Litecoin was created in order to help with more peer-to-peer exchange and sustainability of transferring assets. But then, Litecoin did a great job. The problem is that wasn't the last fork in order to keep Satoshi's vision real, because the last fork was the fork in order to correct the ASIC mining, right? So the ASIC mining correction fork was Vertcoin, and that ended in 2014. Then Ethereum came out in 2014 with huge ICO and huge VC funding, and all of the exchanges started to get, bribed, and all the other chains started to mint just like it. They ended up using the lineage code, and all of the VC funding and narrative kind of just squeezed out decentralization and put in this fake decentralized centralization. So yeah, but the Wildcat Alliance is definitely part of a really cool movement, and yeah, that's how it's gonna end.
Thanks for such a detailed explanation. I think we've learned a lot. And finally, Aslan, it's always an opportunity for our guests to make all the call to actions he needs. We've learned that you have a lot of projects. Let me divide them into two branches, Web3 and biohacking. These are huge branches, a lot of opportunities. Please, right now, name all the resources, people, skills, competences, money, whatever you need to complete your tasks, your projects. Probably somebody who's listening us right now may join, may contribute, or may give another help for your project.
First of all, VC funding is not what we need. What we need is individuals that have the same exact passion and have enough experience to contribute, right? If anyone is interested in being part of the proof of work movement, and they are educated on what decentralization is or want to be, then, and even in the biohacking world, definitely, like, I'm here to help anybody. So yeah, just reach out to me. I don't know if you have links or anything, like my X link, proofofworkstrategy.com, vert.win. So if you go to vert.win, we have a lot of information. We're going to start aggregating news articles. And I mean, like what you did right now by having me on, that's probably the best thing that we can do right now is just get these networks. Meanwhile, look at where the coin is that I'm talking about. It's at a $5 million market cap. This isn't, I don't want hype right now. I want people that want to trade. If you want to get with me on like a certain level where we are buying, Vertcoin, but we're making agreements to wrap it in the stock market, like, that's really what we're looking for. We're looking for a way to get people involved that aren't going to hurt us later, because if we build the system right, we don't, like Michael Saylor does, right? Like he gets loans. He doesn't sell his Bitcoin. He's smart. He knows how to move it. And since this is going to be considered a commodity, or these, proof of work coins, we got to put it where commodities are the right way. So, yeah, I'm here if you guys want to, push a decentralized movement, reach out.
So needless to say that you may find all the links to Aslan's project in the description. And the bonus question for me, Aslan, if you could give one great advice, great recommendations for all us Web3 native fans with a low-term preference who stays for years in the industry, what advice would it be?
Don't believe anybody, don't trust anybody, do your own research, and the truth, that's what you want, knowledge, right? You don't want to believe or trust. So just focus on verified data. And if you are hearing something out there, you got to, the first question is where's the money? Be very careful in Web3. There's a lot of narratives. I've lost a lot of money, so be safe out there. And be around people, ask the people. And there's gonna be people in your life that say don't do that. Like maybe you should listen to some of them instead of just doing it right away. Or you can learn the hard way. And if you do learn the hard way, you may end up where I'm at too, right? Where you just don't quit. I can't tell you not to try, but I could tell you that it's a really tough world out there if you're new. So make sure that you're trying to think like the people that put you there.
We definitely have learned a lot. Let me repeat this 3 times from this episode. That's it for today's episode of the Envelop podcast, where we explore the state of the art in Web3 practices and methods and try to understand the current stage of evolution of decentralized internet. I'm Newton CryptoMC and Aslan, founder of Wildcat Alliance, PoW Foundation, PoW visionary, blockchain expert, and even wellness biohacker, one of the veterans of Web3, I would say, has been with me today. So until next episode, guys, keep building, keep learning, and keep shaping the future of Web3, which is too young industry. Thank you very much, and bye-bye. Blockchain. BLOCK chain. Digital money, smart contracts, NFT, IDO, decentralization, transparency. So many opportunities, but so many challenges. Some financial manipulators, by their actions, confuse blockchain solutions and block their development. The idea that the blockchain should bring copyright and royalties protection to the next level is quite old, but the realizations of these ideas are not perfect at all. There is another problem of determining the value of a particular cryptocurrency or NFT. These and other problems need to be solved. Fortunately, the blockchain infrastructure is evolving. My name is E, Mr. E, and I represent the Envelop project. Many things have already been invented in the blockchain today. Tokens, smart contracts, platforms for creating your own coins, NFTs, exchanges for buying, selling, and exchanging all these blockchain resources. Envelop is another step in the development of crypto technologies. The protocol that works with NFT and cryptocurrencies. The idea is simple but disruptive. Let's assume you have an NFT, Bitcoin and Ethereum. Using the Envelop protocol, you can wrap the original NFT accompanied with several tokens. Technically, you get a similar NFT, but what is the breakthrough here? Once wrapped, the token has a number of additional features that were not available before. The minimal cost appears. It is provided with coins wrapped together with NFT. An asset wrapped with Envelop has a number of properties that allow the original author to receive royalties from the resale of that asset. Various rules can be applied to the wrapped token. For example, a lock period for unwrapping. It secures the asset till the determined moment or safeguards it from speculation during the hype period. At the same time, wrapped tokens can be transferred and traded. These are just some of the scenarios for using Envelop. NFTs become more popular, and the tools provided by Envelop expand the opportunities of NFTs utilization. Wide application possibilities are achieved due to the fact that, in addition to the protocol, the project includes a number of subsystems. The protocol provides functions wrapping and unwrapping. Oracle Mechanics provides asset valuation using analytical algorithms. Index provides a summary assessment of several NFT assets with the common criteria. The project has its own token, which connects all elements of the system. Altogether, this is Envelop, a tool in the blockchain world for building modern and secure systems in various fields. Find more info about the project on the website. Envelop. Make your NFT valuable. Just practical, no hype.